morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity set to extend 3-day winning streak closing the week higher approximately with modest gains, while promising signs of a bottom formation in HDFC Bank indicating positive momentum coming in for the markets. Significant leadership signals evident in SBI and Reliance Industries put together. Midcap Index also appears ripe to achieve a fresh lifetime high level. While FIIQs aren't really encouraging at this point of time, the sold in shares worth around 3,064 odd crore and DIIs have bought equities to an extent of 2,276 odd crore. Let's look at the trade setup. Stock futures are little changed as investor digest more earning news. GIFT Nifty, however, indicates a positive start coming in for the last week, up with gains of around 0.3%. US stock indices end higher after retail sales data declines more than expected. The data raises hopes of Fed cutting interest rates in the coming months put together. And the Asian markets trending higher following a larger than expected drop in US retail sales in January, while stocks that you need to watch out for essentially, which are under the F&O ban at this time, we have names like Canara Bank, which is an addition there. What has been retained is Aditya Birla Fashion, along with that Balrampur Chini, Delta Corp, SAIL and Z Entertainment. What comes out of the ban is Nalco and Punjab National Bank. But let's get going with the strategies, levels and the top recommendations of the day with Osho Krishan, Senior Analyst and Derivative Research at Angel One. Morning there.
Very good morning, Nickey.
You think markets would scale an all-time high level in today's session? If not, do you see that happening anytime soon? And also the strategy for Bank Nifty.
See, overall, there has been very positive sentiments that can be seen from past 3 trading sessions. And currently, if I will be talking about the derivative data, then the call writers have the maximum interest of open interest concentration around the zone of 22,000 only. So it will be very crucial to watch whether Nifty holds the zone of 22,000 in the first half to 1 hour. If it sustains above 22,000, then we can witness some kind of short covering towards the zone of 22,100 on immediate basis. But if I have to talk about on the broader term perspective, so in the entire 2 months, we have seen Nifty closing above 22,000 only for 2 times. So it will be very crucial that where we are closing the market today, if it is above 22,000, then in the coming sessions, we can expect the uptrend to continue. If it does not happen, then we again will get inside the congestion phase of 22,000 and 21,500 on immediate basis. But for the day, initial first 1 hour will be very crucial if it sustains above 22,000 or not. If not, then 21,800 is somewhere where we can witness some kind of a strong support. And again, we can witness a buying traction around the zone of 21,800 on intraday. Now, coming to Bank Nifty have seen a very strong movement from the zone of 200-day SMA in the last 3 trading sessions. So it has been consolidating near the zone of 45,000. And again, we have witnessed a strong traction coming in the private banking and basically the NBFCs. So which has given a very strong thrust to the Bank Nifty. So here onwards also 46,200 is the zone, which is very crucial. Although Bank Nifty is opening around 46,400 odd levels, but if we sustain 46,200 for the first half of the market, then from here onwards we can witness a very strong rally. Upward target will be for the day will be approximately 46,800, and on the downside 46,200 is the first support, followed by 45,900 on spot levels.
I don't know, Osho, if you've noticed the fact that Indian market has broken the 1-to-1 correlation with the US market. Do you think that unless US market really collapses, bad days would be a buying opportunity for Indian equity markets?
See, looking at the resilience that we have witnessed in the last 2 sessions where the US market have corrected massively, we opened with a gap down, but again from those levels, as you have mentioned that our market is recoupling with the US market. So we have seen a very strong traction. So it's the power of Indian equities which is having a very strong traction. So even in the coming time also, we are not very much pessimistic in our market. We are actually quite optimistic, and we are expecting that from here onwards we should witness a very strong up move in the coming period.
Sure. I mean, the domestic triggers are pretty strong, right? Political developments are aligning to the Modi 3.0 version. PSU rally has resumed, but will get stuck specific from here on. That's something that you need to watch out for. Some smart fund managers are booking profit in OMCs and railway stocks. Many smart fund managers are adding PSU banks to their buying list. But there we go, Nifty 50, a start above that 22,000 level. Bank Nifty, well, we are looking at a number which is sub 46,400 mark, but nearing to that level. Advances and declines, well, we are looking at advances. Well, the market breadth right now, rather, is skewed in the favor of advances, like how you can see on the charts right now. Midcap Index is doing well. Small Cap Index is acting no different. Midcap Index is up with gains of 0.5%, and Small Cap, a bit of outperformance coming in on that one. But let's pull up PSU banks. That's an interesting one because that's where all the eyes are on. And post that, let's look at RIL. Because RIL and SBI establishing new leadership of sorts. There seems to be a bottom formation coming in for HDFC Bank too. So 0.7% for PSU banks and Reliance. Well, a flat start with a bit of negative bias for Reliance, but SBI next. These are essentially two counters which are doing extremely well, or rather have supported the markets. Though the market, the weightage of SBI isn't really too high, but it gives a flavor of the overall PSU banks rally. HDFC Bank next, just to see if we are done past that bottom formation, which has seen some serious amount of drubbing coming through and some traction building in early deals for HDFC Bank. Top gainers and the top losers before we navigate our conversation to Osho again. Well, top gainers, let's see how the list essentially looks, because IT also seems to be pretty much, ripe for the upside momentum. But we'll figure that out. M&M, BPCL and Coal India. These are some of the top gainers that we have on the list. Tata Motors, Infosys and Wipro. These are other top gainers that we have on the list right now, along with Hindalco, Tata Steel and Ultratech Cement. Well, a bit of metal names adding to that list. Metals have been doing well, for the past couple of sessions, months, I would say rather. Let's flip across to the top losers on the screen. ONGC, Power Grid, Sun Pharma. These are some of the top losers that we have. ITC, Axis Bank and Reliance. Well, that's flipped a little bit, needs to be monitored here, but support coming in from RIL, the index heavyweight, which is a sector in itself, will of course give in more strength to the bulls out there. Osho, HDFC Bank and RIL, what's your view on these two, the heavyweights per se?
See, for HDFC Bank, I am expecting that it has bottomed out, because if I'll be looking at the overall broader perspective or a very longer time frame on the technical charts, then it has taken the support of two swing lows on a very broad base, on a very broad time basis. So from here onwards, I am very much optimistic for investment point of view. Near about 1400, 1420 is the zone where one should try to accumulate this counter, keeping a stop loss of 1380. And on the higher end, we can expect a very strong upsurge from a medium-term time frame. For short-term, 1460 to 1470 is the target that I am expecting in the coming positional, let's say 2 to 3 trading sessions. So overall, HDFC is
for
looking very
Osho, what's the target looking like
at current levels. 1470 and 60 for short-term perspective.
And
but for a higher duration, medium term, I am again, there is one resistance in between near about 1520. Once it surpasses those zones, then we can expect 1600 odd levels in HDFC Bank.
Okay, that's the word coming in. Also for RIL, Osho, if you could give in more understanding on that one, the index heavyweight, along with that IT names too, right? What do you like within the list, if at all?
Firstly, coming to Reliance, well, Reliance has seen a very drastic up move, a vertical upsurge that has been seen. But if I'll be talking about the technical perspective, where it has given a breakout for which the target comes around the zone of 3000. So here it is witnessing some kind of resilience around the zone of 3000. So this zone is very crucial for Reliance, and I'm not expecting it to have a very aggressive movement from here onwards. It can subside, or it can even witness some kind of cool off that could be considered healthy. On the lower end, 2800 is the support zone, and on the higher end, 33,000 is the immediate target. Now, coming to the IT names, the most likely IT name for me is from the mid-cap space. Emphasis has seen a very drastic breakout in yesterday's trading session. Approximately, it was consolidating near the zone of 2600 odd levels, but yesterday it has seen a very drastic move and has moved towards the zone of 2700. So one should definitely eye this counter on the higher end. We are expecting 2750 to be seen as the immediate target. Once we surpass the zone, then it has the potential to reach towards 2900 from short to medium term time frame.
All right, Osho, we're just going to get back to you with the PSU names and your top recommendation. Allow us 30 seconds to address some stocks and news. Entro Healthcare is the new kid on the block, which will be listing in from few moments from now. The final issue price for this has been fixed at 1,258 per share. The IPO shares could not attract in any premium in the grey market. We're expecting a tepid response coming in for the listing as well. This is the lowest subscription that we've seen for the IPO since HMA Agro. Now, it's got subscribed by nearly 1.58 times. HMA was subscribed by 1.62 times. So essentially, a bit of a drag which is expected on this one. Yes Bank, Carlyle Group has sold an equity worth around 1,056 crore in Yes Bank on Jan 15. Of course, the bank is sold this via an open market transaction at a price of around 27.10 per share. Morgan Stanley has been on the buying side to an aggregate level of around 830 crore. Now, in overall, Carlyle Group has picked up nearly 10% stake in equity when it comes to the Yes Bank at a price of 13.78. That's quite some handsome gains coming in there. UPL, there's a bit of downgrade coming in on the long-term issuer rating by rating agency Fitch, where it has been downgraded to BB plus from BBB minus, citing in the weak financial for 9 months, which have essentially been impacted due to lower global crop protection demand, prolonged destocking, and production overcapacity in China, weighing in on the financials. Osho, your top bet within the PSU space and top recommendation. 30 seconds, please.
Firstly, the technical recommendation which are looking very positive. First one is HDFC Bank, the private bank. It is looking very positive. One should definitely try to buy with a stop loss of 1380. On the higher end, 1450, 1460 is the target. Second one is Aarti Industry. Aarti Industry is hovering at a very breakout zone. So 680, 85 is the zone where one should try to accumulate this counter. On the higher end, I am expecting near about 720 to 730 as a target on immediate basis. 660 should be acting as the support zone and should be kept as the stop loss. And from the PSU counters, there has been a strong rally, but again, to choose between it, I will be preferring Bank of Baroda. Bank of Baroda have seen a very strong resurgence in the recent period, so I am expecting there can be some upside movement for this counter. Near about 280 is the first target that one can expect, and for that 270, 268 should be kept as the stop loss. But on the higher end, I am expecting a target of nearly 295 to 300.
Okay, Osho, a little skewed question there between RIL, HDFC Bank and State Bank of India. If someone was supposed to enter into this, into the stock at these levels, at the current levels, which stock would you recommend?
Definitely HDFC Bank, because looking at the overall momentum, both the other counters like SBI and Reliance, undoubtedly they have outperformed the market. Even they have taken the sentiments on the higher end, but they are on the overbought position. So having a fresh positions at these counters at current levels can be something that one can stuck their position for a longer duration. So better to invest in such stocks which are having very strong fundamentals and having a very decent price level movements also. So HDFC Bank is looking very attractive, and as I have already mentioned, it is at a very multi-support zone. So one can definitely try to look out for HDFC Bank.
Okay, the bottom formation has already taken place for HDFC Bank, and this looks like ripe, at least from what Osho is saying, that it looks like a good bet here on. But Osho, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation right here with us.
Thank you so much.
All right, now let's navigate our conversation to Subham Agarwal, who is the co-fund manager at Aequitas. Hello there.
Hello, Nickey. Good morning.
Subham, hi. Your assessment overall on how the market looks set for scaling a lifetime high level. A, What do you think? What's your assessment? What's your reading? You think mid-cap and the small-cap indices again would outperform? That's one, after the sharp bit of correction which has already come in. And B, do you think the valuations look attractive for the markets? If not, what are the downside risks to this rally from here on?
So, look, Nickey, if we broadly speak of India today, I think all cylinders are firing for India. If we look at the macro numbers, government has done a decent job when it comes to the fiscal consolidation. Inflation is, I think, quite manageable. We have a situation where crude prices also remain stable in spite of the global geopolitical situation. So right now, I think everything is playing out well for India. So as a fund house, from a longer perspective, we are very bullish when it comes to our market. But what worries me today is the entire valuation part. So people kind of have stopped talking about risk because a scenario has been created where global investors are also putting decent amount of money today in India, because in the global context, there are no other sizable market where money can be deployed easily. So again, market is at all-time high. I think small cap and mid cap has given returns of more than 60% in the last 1 year. These are supernormal returns. If you look at historical P, the market looks to be in the very hot zone. As fund house, we have decided to remain cautious short term, and but having said that, we are quite bullish on the Indian story from a long term perspective.
Okay, so between the short term here would be, I'm assuming this year, what sort of returns are you anticipating? That's one. And also, what are the risks per se which make you not so bullish, or rather cautious, adopt a cautious stance on the market?
See, right now everyone is talking positive about India, right? So it has become kind of a consensus trade. And when I talk about risk, I can see a lot of cracks emerging. The water tables are below par. Yesterday I heard the commentary of Mahindra and Bharat Forge. They were also not so great. And then we have banks who are scrambling to mobilize fund for lending. So we see a decent amount of crack emerging from the market perspective. But on the stock market per se, if you see, we have a situation where a lot of HNI investors have kind of become fund managers. We have a lot of retail investors who have jumped in on the upside. Then we are seeing a lot of big IPOs being announced. Hyundai announced 25,000. So all this situation points out to a scenario wherein the market is kind of reaching the top. Now, whether 3 months, 6 months, or 1 year, we don't know, but we remain cautious short term. And in terms of return that we expect to generate over the medium term, I think that will be quite normal. And again, you have to look market from a wider perspective. Over the last 10 years, if you see, small cap and mid cap have performed really well. So going forward, we definitely feel that the returns will be quite moderated.
Okay. Any range that you'd like to provide us with?
See, we are not sell-side analysts, right? So it's very difficult for me to give any kind of target per se. But all we can say is that for our investor, we
target there is no target there. There's just a broad range that I was looking at. But if you're not comfortable with that, I completely get it.
Yes.
Let's also talk about what further downsides from here on. Do you think the valuations are a bit overheated at this point of time, or you think perhaps the large IPO size is something that worries you? Dwell on it a little more for us.
So look, if you look at the price to earning ratio of small to mid cap, it is, I think the median is around 30 P. So this is historical highs. And my little bit of understanding of financial history tells me that when the market is at all-time high, the people's confidence is also all-time high. So that's where the IPO comes in. We have large IPOs which are getting subscribed. We have a situation where if you see in the general market, the luxury products are booming. So these are telltale signs for me that the market is overheated. You have scenarios where flight prices are north of 40,000, even for Mumbai to Delhi. So I think the entire economy is overheated, and the situation where everyone is thinking that this is super normal. And just to take you back to history, 1929, Irwin Fisher told on September 3rd, 1929, that market has reached a higher plateau for like a normal higher plateau. But then in October 29, we saw a series of black days. So that's a situation which is being created right now. I don't know where the peak is, but we certainly believe that returns from here on will be quite moderated.
Okay, that definitely doesn't sound so good. Sounds like a good news
No, I
on a
don't
day
believe.
where everybody is gung-ho and probably a bit optimistic there. But fair signs of caution, few black days ahead probably. But going with your assessment, what are the themes that you're essentially investing in right now, and what is the kind of cash that you're sitting on?
So as we speak, I think our portfolio is close to 25% cash. And again, the themes that we invested was something that we invested 2-3 years back. We invested heavily on the infra space, on the manufacturing space. We took some exposure to media space, and recently in the last 1 year, we have also taken bets in the PSU space. So these are the various area where our investment philosophy kind of got aligned, and we continue to hold most of them. However, the margin of safety, as I already mentioned, is not there for me to add on to the positions.
When you speak about PSU, some smart fund managers are adding PSU banks to their buying list. Do you also belong to the same camp, or how is it?
No, so we don't belong to that camp. I think we have been very vocal in terms of banking, and again we took this broader call almost 2 years back, and our plain and simple reason was bank is overbought, and we typically don't want to deal in consensus trade. We are contrarian by nature, and currently also if you see banks, I understand PSUs are doing well, but if you look at last 1 year return, it has been 11%, right? Whereas small and mid cap has gone up 60%. So it has kind of we have kind of been proven right on that. And currently, if you see, majority of the bank is struggling to mobilize cash. So on the cost side of things, there is inflationary pressure. And if you see on the lending side, the corporate balance sheet is completely clean. So there is a situation where is a great deal of competition between the banks to lend, and and the unsecured part is something that we don't really like. So overall, from the banking space in PSU also, we are kind of staying away. However, in PSU, we have played the larger player, where the dividend yield was more than 9%. They are larger franchisee, and cash generating companies. So that's an area where we invested. Few of the utility companies and power finance companies specifically.
Okay, so something like a PFC, REC, these are some of the names that I could think of. But apart from that, anything within the defense space that you like right now? I was speaking to a couple of analysts around, and they said that this time in this year, the rate of returns of defense will be similar to an FD returns after the phenomenal run that we've seen in the previous year. Do you concur with that view? And do you still think there are some pockets within the space which offer an attractive risk to reward ratio given the kind of valuations that they're commanding?
So we concur to the view that defense have rallied quite a bit, but I'm not sure if FD return is something that you are looking at. You might look at capital erosion in a few of the segments. Having said that, PSU as a entire theme as of now, there are defense, railway theme, the smaller themes within PSU which has kind of played out. But when I see the fundamentals, the earning that have not kind of flowed in. So when 2 days back, when 2-3 days back, when PSU cracked, these were the very specific name that cracked the most. So those are area that we are staying away from as of now, but we keep an eye on that.
Okay, apart from this and of course the defense space and the bank space, which are the themes typically that you don't like, or you think the valuations are a little more stretched than what you like?
The entire market, Nikkei is 25p if I look at Nifty, and small and mid cap is 30. So I believe the entire market is overvalued. And even if there are few pockets of valuation which is emerging either in chemical space, let's say, or some of the mega caps, because in mega caps the large private banks or FMCG, they have not really performed over the period of time, but again the growth is also not coming there, right? So we believe that when the correction comes, it will have a knock-on effect on all the segments, and we have our dry powders ready to take opportunistic call.
Okay, point well taken. Let's dwell on the themes that you actually like in that case. Apart from that, I'd also want to discuss about pharma and IT, the two, rather defensive names which have held, or let's just say have supported in the markets in the month of Feb, significant momentum which has been seen. Most of the analysts around are also perhaps there is an analogy where they're relating the returns that pharma could see, just like the realty index that witnessed in the previous year. Do you like pharma space, and if yes, any select names in the pecking order that you'd like?
So pharma is a segment that we did analyze last year, and there were few structural changes which kind of played out. With this entire US-China situation, what has happened is now US has become more favorable towards India, and pharma is a segment that has been one of the key beneficiary of it. And if you look at the raw material pricing for them, that has also kind of mellowed down. So we are seeing a situation where spread is also increasing, and then they have decent market to serve. But having said that, even though the valuations were right and structurally pharma for us was looking fine, we did not take a bet into pharma. We do keep an eye, but currently we are not adding into any specific names. And when it comes to IT, the second part of your question, so look, IT from a longer term perspective, I think there is a lot of disruption. So AI is kind of playing out, and the cost structures of all the IT companies are kind of impacted. So we are again not looking into IT segment as of now for any investment. Our portfolio is completely aligned to infra, power, and manufacturing, and some bit of PSU, as I already mentioned.
Okay, in today's session, at least we've seen fair bit of traction coming in for OMCs, BPCL to be precise. Jefferies has actually come out with a report today and has upgraded, BPCL to buy from underperform. As it says that there is all these three OMCs offers largest margin of safety. They have an underperform rating on HPCL, hold on IOC, but a rating revision which has come through BPCL. Would you also go in the same pecking order, or you don't like the space at this point?
So look, we it's not that we don't like that space, but as of now, because of the overall scenario, we want to hold cash, because when the correction comes, everything will correct, right? And BPCL, I don't like to talk stock specific, but the OMCs are definitely a segment where the growth will also be there, and their balance sheets are also quite good at this point in time.
All right, Subham, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation right here with us.
Thank you, Nickey. The pleasure is all mine.
All right. Also, I'd want to mark in NMDC. Citi has actually downgraded the stock rating to sell from buy. Target price has been raised. It talks about no volume upside beyond FY25 and the domestic price being at an export parity. So a bit of drubbing coming in on this one, although the price hikes have been taken, but volume remains to be a little slower, is anticipated to be a little slower in FY25, but it's a good day for the markets. Let's do a small check, because we started about that 22,000 mark. Let's see how Nifty 50 right now is shaping up for you. Well, the gains, it's flirting around that 22,000 mark, but holding on to gains with more than 0.4% thereabout. But that's all that we have on this edition of Trade. With this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.